I'm going to try to max out my tax relief for 2021. And if you don't already know, the tax relief limit is $80,000. Just to start things with, this is a screenshot for my last year's tax relief. And you realize that I only did 64,270, correct? Didn't quite max it out. And this year I have a bit more spare cash and income level is a bit higher. So I do want to really aim for the 80,000 mark. And to start things with, there's always earned income relief and NS Men relief, which are automatically applied for most Singaporean men. But the rest of the items, I have something interesting prepared for you. So if you're looking to reduce your taxes for the coming year ahead, this video is for you. Hi guys, welcome back. Without further ado, let's start on the first relief for today, which is actually the Child Qualifying Relief, QCR. And if you see my statement for 2020, there's $8,000 allocated there, correct? And that actually comes from my two sons, $4,000 each. So the next question is, why are both tagged to daddy and not to mommy? A simple reason, because for working moms, there's actually something called the Working Mother Child Relief. That's actually very powerful. If you haven't seen that table, it's actually a percentage of mommy's earned income. So if mommy is a high income earner, let me illustrate to you how it actually works. For a mom with 3 kids, for example, the total relief is 60%. And using 100,000 income, mommy will already get 60,000 in terms of tax relief from WMCR. And if mommy has other relief like CPF contribution and stuff, the 80,000 cap is very easy to burst. And in my course of financial advisory, I've seen before, for couples with 2 children and both are high income earners, it's very common to see one child tagged to each account. And that was actually okay before the 80,000 cap was implemented a few years ago. So moving forward, if it's tagged to mommy and wasted over there, I would suggest for you to allocate both to daddy like what I've done, and daddy can actually save some taxes. This child qualifying relief only applies to parents with children, and child must still be in studying years, which means university and before. Once child is working already, this qualifying child relief does not apply. I don't know how many of you are staying with parents, but if you do, this relief definitely comes in very handy. Now, I actually learned some things reading this qualifying condition again, which I'd like to share with you. I realized actually for PRs especially, if your parents are also here in Singapore and have stayed more than 8 months, they actually still allow you to qualify for this relief. Your parent must be more than the age of 55 and not have an income more than 4,000 annually. Also can realize, in terms of annual income, it also includes rental income as well as SRS withdrawals. So later we'll touch a bit more on SRS. I realized if we contribute to SRS, in future when we withdraw it, our children cannot claim this tax relief. So it's something interesting I discovered preparing this material for you. And the annual income also includes foreign source income. So by the way, for parent relief, it can actually be split between children. And this diagram from IRAS actually shows how it can be done. The split need not be on an equal amount, and if all siblings are okay with it, the higher income earner should naturally take more of the relief. And also do note, staying with parents and not staying with parents, the level of relief is also different. Last but not least, if your parent is handicapped, the relief level is even higher. The third relief to cover for today actually comes from CPF contribution. If you see my statement for 2020, you realize I contributed $21,470. So this is actually where I'm able to step up even more tax relief because I'm prepared to contribute even more to my CPF for this year. But let me explain how it actually works. The maximum relief for CPF contribution is $37,740. If your employment already contributes $20,000 for example, you can still top up $17,740 based on the voluntary contribution scheme. And while I was doing my own top up, I realized something. CPF website doesn't have a place for us to check the remaining balance. And this figure from my conversation with the staff over there is you have to manually calculate. So my suggestion for CPF is to help us all create the remaining amount that we can contribute, because any amounts that are in excess of the $37,740 will be refunded with no interest. And having said that, I have a further tip to add for you. Do you know that CPF interest, while it's calculated on a monthly basis, for that month itself, it actually takes the lowest amount you have in the account and do the interest calculation on that lowest amount. So it's actually not an average of the month itself. That means that if you understand how it works, it makes sense for you to contribute towards the end of the month, correct? And that's actually what I've done for myself. I actually pumped in quite a bit towards the end of October. Because if I pumped in on 2nd October instead, there's going to be no difference for the interest I collect for October. Might as well leave it in bank still. And there are further hacks to share with you also. Do you know you can actually do voluntary contribution to your MediSave? and that actually gets you tax relief. And as of 1st of November, government has actually mentioned that moving forward, any MediSave contribution will not be counted to your overall voluntary contribution of $37,740, which means if you don't have the basic healthcare sum BHS, you can contribute to MediSave, get tax relief, and still contribute voluntary contribution to all three accounts and get tax relief. So that's a key difference moving forward to 2022. CareShield Life is also something new that came into the market, and some people have actually used MediSave deductions for CareShield Life Premium and use the opportunity to contribute to MediSave itself. So there are actually little hacks that can help you reduce your tax relief if you are willing to pay a bit more attention to things. The fourth relief to note is actually the SRS relief, Supplementary Retirement Scheme. I've done many videos on this channel for SRS, so if you're keen, look for links below. But SRS for Singaporeans and PRs is at 15,300. For foreigners, it's at 35,700. And for myself, I've been doing the max of 15,300 for the last few years at least. But having said that, SRS contribution is voluntary, which means you can contribute 15,300 this year, and next year, if you have no employment, you can choose not to contribute. It's not an obligation. And an important point to note is government will be raising the statutory retirement age from next year onwards to age of 63. That is why many who haven't done SRS accounting before are thinking of doing it this year and contributing at least $1 in to lock in the statutory age of 62 for themselves in future. So if you haven't done so, look for UOB, DBS and OCBC to open your SRS account today. All account openings can be done online. The fifth relief comes from retirement sum topping up. This only applies if your CPF special account hasn't hit the full retirement sum cap yet. And retirement sum topping up RSTU actually directly contributes to your special account. You can contribute any amount you want, but the limit for relief is $7,000. Now in government's 1st November update, they'll be raising the retirement sum topping up limit to $8,000 next year only. So for this year, it's still $7,000. And if you're keen to do the topping up yourself, let me show you some screenshots. CPF website now looks a bit different from previously. Go to My Requests and go to Contribute to My Special Account. Nowadays, we can transfer using a PayNow QR code. So all in all, these are my steps that I'll be doing to achieve the 80,000 tax relief. And using last year's as a reference point, I'll be increasing the CPF contribution amount closer to the 37K mark so that I'll hit the total relief of $80,000. Any further ways to reduce your taxes probably can come in donations, which I've done before. And it must be to charity organizations that are approved. If you are making a donation, government actually gives you a 2.5 times tax relief on the amount that you have donated. Other forms of reducing your taxes include contributing to your parents' retirement, and that is a topic that I've covered before on a previous tax-related video. So if you're keen on that, check out the tutorial which I'll leave towards the end of this video. And since you stayed here, I'll be giving a quick teaser on what's going to come up on this channel. I'll be sharing my CPF statement with you to help you understand what I've done in the process of building up my CPF account. And I'll also be sharing with you my interpretation of whether I'll be topping up to my children's CPF account or not. So if you're keen for the topic, subscribe and stay tuned. And again, if you haven't smashed the like button, inviting you to do so. And if not, I'll sign up from here and introduce you to a video I've done previously that might be interesting to you. 1M65. Have you heard of it? If you haven't, check out that video over there. Take care and goodbye.